It's the time of year where things start to change in the housing market typically. Are we seeing that in the Southern California housing market? We are going to run through the sales numbers in the Southern California Housing Market Report. But before we dive in, it's fair to go through this comment from my last market update video. Drew wrote, low inventory, high prices, high interest rates, high demand. Why even do these videos anymore? Just more of the same every darn month. And Drew, that is actually a very fair question. It does seem often that things have just continued to go up and up and up, but there is nuance in the market, just as there's variance across the nation. Things are up in certain areas, down in others. We have to continue to track the data to see if and when things change. And we are seeing a change in one county in particular where it does appear it's already peaked and it's starting to move into the slower trend that you see in the second half of the year typically. So that is a fair question, Drew. And it's one I ask myself many times as I sit down to make yet another long data video. But we're going to keep bringing you these numbers and hopefully you'll continue to see the value in this data. If it's your first time here, hey there, Christian Walsh, real estate agent with Wire Associates, Berkshire Hathaway Home Services. We have been helping buyers and sellers make the best actual and factual data-driven decisions in this crazy market. So if you're ready to dive into the Southern California housing market, including Los Angeles, Orange County, Riverside, San Diego, San Bernardino, Ventura counties, hit that like button. And let's get started. Moving into Orange County single family, we can see listings are way down. We can see that properties going under contract are down as well. And we don't have the twist like we've had. So we are going to see that inventory, it looks like, may start to build slightly. Still record low levels of inventory, but not an unhealthy market where we have way more properties going under contract than we have new listings coming. The other thing to note, like I often reference, is that the number of pending sales is lower than the number of properties that have sold. So what this means is going forward, because fewer properties are going under contract, we are going to see that the number of sold properties is dropping as compared to this month. Is that a strange thing? Is that a strange event? No. We are getting into the peak of the market where the most properties sell and then they start to taper off. So that is not unexpected that we'd see that. Another thing you can note here in 2020, by June, we started to see more properties going under contract. So by this point in time, we could see the market heating up. And I remember working with a buyer in June of 2020, and it was multiple offer time out there. She ended up having to bid $5,000 over list price and waive appraisal contingency. And it's one of the best things she ever did because she, at this point in time, is up about 30 or 40% in value having purchased then. But there was no way any of us could know. And what are some of the reasons for the number of new listings being so low? Well, there's obvious reasons, and we've talked about them before. Interest rates. If you're locked in at a 2.5% or a 3% interest rate on your mortgage, if you bought at the right time, you're not interested in selling and taking on a 6.5% or almost 7% interest rate, especially when you're also going to have to increase your price as well to make an upward move. And that's what we're seeing. So fewer people are selling their properties, listing their properties now because they're rate locked. Now, what's interesting and what you need to stick around for, because we're going to explain multifamily has some similarities, but many properties are not rate locked, and I'm going to explain why. Moving into the Altos Research data, some of my favorite out there, and of course you can sign up for any city or zip code across the nation. Just click up here to do that, starting with Orange County. And what's great here is we were just going through numbers, particularly sold listings. That is kind of old news. Those are old escrows that were open up before. We want to get a look into the future. We want to get a peek. We need to look at inventory, and then we need to look at absorption or number of properties being absorbed going under contract. This is going to give us a peek into the future, and it is not necessarily a bright future for Orange County. Things are about to change, and I'm going to show you where and why. So Orange County Market Action Index, it is a strong seller's market. No denying that. Any of my Orange County listings fly off the shelves as long as you're priced relatively close to market value. Working with buyers is very tough in Orange County. We look at inventory, and this is record low, lower than in 2021, and very low, less than half of where it was in more normal years. It is starting to tick up a little bit, but that is to be expected at this time of year. And we need more inventory. There just isn't enough. Now, here's where you need to look closely. Days on market, obviously, at the bottom of the market, the bottom quartile for houses, things are flying off the shelf within 2 weeks. For the first quartile, second quartile is 3 weeks. And we can see at the top, even the most expensive homes, days on market 63. That is very fast. But here's where it gets interesting. We look at absorbed. So these are the number of properties in that quartile that have gone under contract in the past week. And we can see that 24 were absorbed, but we had 35. We can see for the next quartile, 57 absorbed, 63 new, 97, 100, and 122 and 134. This is what's unique. So what we're seeing here is the number of absorbed properties is lower than the amount of new inventory coming to the market. So that means we're going to start to see inventory build. That will also mean the days on market will start to go up. This will give buyers more choice. So this is, in my eyes, a turn in the market. We've hit the peak, and things will start to turn now as we go through the rest of the year. But you have to continue tracking these numbers because it could just be a 1 week fluke. Things can change. This is unique in Orange County. You won't see it in the other counties. With the 4 quartiles, we have fewer properties being absorbed for all of them than new inventory coming. One more quick thing, you know I love data. If we compare condos for Orange County, it's a different market. I bet you didn't know you could do that. You can see how things are moving for condos. Very strong sellers market. Diving into the multifamily data, one of the only places you'll get consistent multifamily investment property data is right here on this channel, so make sure you subscribe. Taking a look at Orange County, we can see COVID had a similar effect, but in some cases for different reasons, and there's some things that aren't quite the same. So we see the number of properties dropped in 2019 at this point in time that sold, but we can also see that the pending sales didn't take a huge drop, nor did the new listings take a huge drop. In fact, the new listings have taken a huge drop now. But like I promised in the single family section to explain, the multifamily market has a slightly different reason. It is interest rates, but it's not a rate lock necessarily. In many cases, especially properties that are 5 units or larger, it's commercial financing, they are not going to be fixed rate financing. They're going to be 5 to 7 to 10 year adjustable, most often 5 to 7 year adjustable rate mortgages. So they're locked and they're at low rates, but that's going to expire at some point in the future. And so they're not as rate locked. Really, the effect in interest rates for multifamily is the effect on cash flow. And cash flow is what's left over after you pay all your expenses and you pay your debt service. So as interest rates have increased, that is leading to larger mortgage payments if you're acquiring, and it means the properties are cash flowing less. So in many cases, people aren't going to list their property and go buy something else because they're doing great on cash flow as long as they're still locked at their low rate. But at some time in the future, particularly for 5 units plus, they're going to have to refi. They're going to have to bite the bullet and pay a big interest rate increase. And many commercial mortgages for multifamily 5 plus, they do not have a cap on how much the mortgage can reset. So if it was at 3 and the going rate's 7 or 8, it can go a full all the way to the 7 or 8 with that first reset. And then some folks may decide to sell their asset and switch to a different asset type or move it out of California. So we see listings are down. We can see that the number of properties going under contract is solid. It stayed relatively consistent. In fact, those numbers are close together for Orange County. So this is a market where it's very much a seller's market for multifamily real estate. Moving into the Los Angeles market, again, similar trend. Listings are down, record low listings, and we have pending sales way down, record low pending sales below the sales line. So we're starting to see in Los Angeles as well that the number of properties that will close will be lower than we've seen here. It is that time of the year. We can also see that the pending sales increased in June of 2020 like we saw in Orange County, but it wasn't a crazy record level. It was similar to 2018. And then we saw 2021, it got crazy. Big drop off in 2022 and a drop off now. Landlords are starting to bring their properties to the market in Los Angeles, and as the condos, townhomes, single family homes, and bigger buildings, we are starting to see that, talking to more landlords that we're helping. They can now sell them in many cases more easily without the tenant in place, except for LA City, where they have a unique program called the Just Cause Ordinance. We've done content on that. And again, we're helping landlords sell in those areas. So it'll be interesting to see the effect on inventory if we start to see more new listings coming faster than we see in some of the other places we're tracking in Southern California. Los Angeles Altos Research Data Market Action Index, strong sellers market. Month over month, it got stronger. So it's a crazy time. Inventory has gone up slightly, but still crazy record low for houses in LA. And then we can see that in all cases, there were more properties absorbed than new listings that came to the market. So that's different from what we saw with Orange County. And we can see 28 days, 35 days for the three lowest quartiles, 90 days for the top quartile. So that is more in line, more traditional. We see 3 months or longer for the most expensive inventory, but still a market that is moving very quickly and hasn't, from the looks of it, like we saw with Orange County, hasn't reached the peak where the new start to eclipse the absorbed properties. LA multifamily numbers, we can see that the level of listings has stayed relatively consistent, although we are at a record low, but it's not a major record low, where we saw with single family, where it was 60% of listing levels. These are still much higher listing levels. We can see demand is solid, just above demand, number of properties going under contract that we had in 2020. LA is a market where the eviction moratorium is over, and we will start to see that landlords start to list more properties that were maybe non-performing before and they couldn't get the tenant out, but now they can. But there's still rent control in place. Many buildings in LA fall under the rent stabilization ordinance, and rents have been frozen under RSO for the past couple of years. Still can't increase, for example, in LA City, that rent rate. So we can see that rents have continued to stay very low as every other cost has gone up. So, and it's not easy to reset those rents. So it is a market that is definitely very tough to pencil, especially when you factor in the higher interest rates leading to much lower cash flow. If you like data like we do, you're going to love working with us. So make sure you reach out if you are thinking of buying or selling in Southern California. Riverside, huge drop in the number of new listings, but still we have a gap between the number of properties going under contract and the number of new listings. So we're seeing this trend. We're starting to see more properties coming to the market. It's not an unhealthy level. When we look at the Altos data, you'll see that many price points are still moving like hotcakes, but we can see again that big drop. We're at record low pending sales, and we can see that the sold versus pending, that means that the sold going forward will be dropping as we get further into the year. Riverside County, we can see market action index, strong sellers market. Inventory has gone up slightly, not crazy record low, but definitely still low levels of inventory. And an interesting quirk, the bottom of the market for houses, it's taken 42 days to trade. And that's actually longer than it is in the next quartile. Another market where we can see that the number of absorbed properties is higher than the number of new listings. So this means here it hasn't yet potentially peaked. Riverside multifamily, we are at a low level of new listings. Again, similar to what we've seen in other spots throughout Southern California. And we can see the demand is actually down. So Orange County is a hotter market than Riverside for multifamily. We're at about half the number of properties going under contract that we normally would see in the month of June. San Bernardino, another market, big drop in pending sales and the number of new listings, but the gap there is actually not that unhealthy right now. It's at a less of a seller's market, a little bit easier for buyers there when you have that kind of gap. You can see in June of 2020, you see the twist where about 330 more homes went under contract than new listings came to the market. So that's when the market really heated up around that time. And that would have been an extreme seller's market. It remained a seller's market and has been. And if you're priced right, it is still, but it is not an unhealthy market where more inventory is being sucked up. San Bernardino Market Action Index, strong seller's market. Inventory has ticked up a bit. It's been ticking up for a little while. And again, low, not crazy record low, but low. And another market for the most part where there's more inventory being absorbed than new inventory coming. The third quartile is off by 1. But again, another interesting quirk in this market, that third quartile moving quickly. A lot of people buying in that market because it's only 35 days. The lowest half of the market is 42 days on market. So things taking longer to sell in San Bernardino as compared to what we've seen in the other counties we've shown you so far. San Bernardino and Riverside tend to be more affordable markets for rental properties, tend to trade at slightly higher cap rates. And we can see that despite that, and the new listings dropping, the demand is not rallied back. So it's Orange County, we can see the demand is higher as compared to new listings, but we're not seeing that in Riverside or San Bernardino. We'll have to continue to track this. Similar story, drop in new listings, drop in pending sales in Ventura. Definitely at record low levels. Ventura has continued to move along the bottom in the number of pending sales. Now, don't forget, it also happens to have the fewest number of properties in Southern California. So when you have fewer properties, fewer are going to trade. But we will continue to watch what's happening. And again, another market where the pending sales below sold. So that means going forward that sales are going to start to drop. In Ventura, if you've been watching these, it was not a very strong seller's market. It had waned towards the beginning of the year, but it has rallied back to a strong seller's market. Inventory low, and we can see that for the most part, another market where more inventory being absorbed than coming to the market, and the bottom half of the market moving very quickly, even that third quartile moving quickly, 28 days, top as well, considering the price point. Still that median at the top quartile is 4.17. Ventura multifamily all over the place, as we always joke, but you can see that number of new listings is down and demand is down. But it actually looks not too unsimilar to 2019 and maybe 2018. So kind of a normal market for Ventura multifamily. And finally, San Diego single family data. We can see that there was a big drop in pending sales. Actually, last year, 2022, one of the few that had a huge drop in pending sales, lower than previous years. Of course, interest rates were higher, and that was a big gap between new listings and pending sales. I actually double checked this number just now just to make sure it was accurate. Checked it in the MLS and it's accurate. We can see that this is also bucking the trend here in San Diego. The number of properties that have gone under contract is higher than the number of sold. So we're actually going to see the sold will be increasing, unlike the 5 other counties we've just covered. And we can see the gap between new listings and pending sales is very tight. So you'll see this reflected in the Altos Research data, very much a seller's market in San Diego. And San Diego has continued to be the strongest seller's market, and we can see it remains strong seller's market. Inventory has turned and started to go up, not atypical this time of year. So looking at new versus absorbed, we can see the top half of the market is starting to build inventory, but the bottom half, it's still on fire. 14 days on market, 21 days, and there's more absorbed than new listings. But the top half of the market, it does look like it's starting to soften. We'll see if it trickles down into all the price points. Maybe San Diego is starting to get to its inflection point for the price peaks and sales this time of year, as we saw in Orange County. And San Diego, we're seeing all across the board here throughout Southern California that it is a low market for demand. We're definitely at a record low for pending sales in addition to new listings. So it looks like the winner for multifamily right now is Orange County, but we'll keep tracking that to see if it changes. Does it look like summer's starting to set in your neck of the woods? Let us know in the comments below. We want to know what you're seeing out there. Make sure you subscribe to those Altos Research reports, and you'll get our free weekly email newsletter, so you get updates like these delivered delicately to your email inbox every Sunday. And if you like this video, make sure you check out this next one where we dive into more on the Southern California housing market. Thanks for tuning in. This has been Forever Agent Christian Walsh with Wire Associates, Berkshire Hathaway Home Services, and we want to hear from you.